In this video, we are going to walk through how to construct a multi-step income statement in financial accounting. The purpose of the income statement is to show results of operations. It answers the question, how did we do? The income statement covers a period of time. For example, you can have an income statement for the year, the quarter, or the month. The basic equation for the income statement is revenues minus expenses. The income statement starts with headings or titles. The first line is always the official full name of the company. The next line is the phrase income statement or statement of operations. Both of these phrases refer to the same financial statement. The third line will always be the period line. It will be for the year ending December 31st, whatever year, or it could be for quarter ending March 31st, whatever year, but that date will always be for a period of time that is specified, not for one date. We are going to go through an example of a multi-step income statement. Here we have the headings for the Blue Giraffe Company's income statement. There are the three lines to which we previously referred. The first line in the income statement after the headings is sales. It can also be referred to as sales revenue, service revenue, or something similar. The next line will be cost of goods sold for a retailer or manufacturer. A service company would show cost of sales rather than cost of goods sold. Cost of goods sold is an expense. So we subtract cost of goods sold from sales to arrive at gross margin. Gross margin is also known as gross profit. Next, we list general and administrative expenses. Operating income is gross margin less general and administrative expenses. Next, we list interest and tax expenses. We subtract interest and tax expenses from operating income to arrive at net income. It is possible to have interest income to be added, but here we will assume it is expense. That's it. The income statement does have some variations from company to company, but the basic overall format is revenues less expenses to arrive at net income. By the way, a single underline means that you should add or subtract the numbers above the single underline back to the prior single underline, if any. A double underline means that this number above the double underline is a final total. We are now done with this one. This video was created and narrated by Dr. Wendy Tietz and is part of the Accounting Skill Builder video series. See accountingisanalytics.com for additional faculty and student resources.